What's going on? So let's see how Tuesday was. Tesla got crushed over 5% in one day. Why did Tesla stock go down? Was it a tariff thing? Does anybody know why Tesla went down today? I mean, 5% is pretty big considering the market went up overall. Tesla's falling as Trump Musk feud escalates. Where it goes next. Tesla's IPO was 15 years ago. The stock is up almost 300x. Sheesh, 300x. So if you just put a measly $1,000, you'd have $300,000. Tesla stock drops as Musk attacks big beautiful bill. So I guess there's some like tension between him and Trump. They're not agreeing. It's so hard to find articles that you can read. It's all everything's blocked. And they just had a robotaxi rollout, which seemed to be successful. Tesla drops as Musk attacks the bill. Sales set to slump. Yeah, the stock sales have been slumping for the past few years with Tesla. Okay, Tesla down over 5%, managed to do something unexpected after the company's long-awaited robotaxi launch. Nothing. Okay, you can't read the article, so this is Barron's. Let's see if you can read this article. Probably would be the same thing. Tesla tumbled in trading Tuesday after Trump suggested the Department of Government Efficiency. That's the department tasked with rooting out inefficiency, review subsidies given to Elon Musk's company as the pair reignited their public feud. So, as usual, it's not a fundamental problem. It's not like sales are down or they are less profitable. It's just this conflict he's having with Trump. Stocks generally move a lot with news. The fundamentals, it's a long-term game. That's why you can make a lot of money trading on news reports. The problem is you don't know when the stock will finally go up or finally go down. That's the difficult part. So let's see the biggest gainers for the day. Let me know in the comments if there's a stock you want me to look at. We can run a DCF. I was doing taxes, putting together my chart for taxes. So if you sell a stock, if you own a stock less than a year and you sell it at a gain, these are the tax rates you pay. You can pay as low as 10%. I get, for example, if you're single, like say you're in college making only $2,000 a year, you only pay 10%. But if you're making a lot of money, you might pay up to 37% of taxes. Most people aren't making $600,000. If you're doing well, you're probably making 100 to 200,000, so you pay 24%, which is not too bad. That's the ordinary taxes. That's the taxes you pay on your W-2 paycheck. But you should hold a stock for at least 1 year, so you'll probably pay 15%. A lot of people fall into the 15% category. That's if you make between $50,000 and $500,000. So let's look at the biggest. So who went up? BioNexus went up 263% today. $5 million market cap company. Probably no one's looking at that stock. Let's see if there's any big ones. IHS Holding, not too familiar. Array Technologies. Triumph Financial. Sounds like a fintech. I wonder if it's a fintech. Sunrun. Sunrun seems to be going up a lot. They have terrible fundamentals, Sunrun. I've done a video on that. I remember someone came to my house trying to sell me solar from Sunrun, and I told him, and I just happened to be like just finishing up doing a video on Sunrun, and I was telling him how weak the company's balance sheet is. He was actually really interested in what I had to say. He's like, he was trying to defend it, saying we're not going bankrupt. And I said, I know you're not going to go bankrupt. Maybe 10 years from now, but it's really, financially the company has never made any money. It's always running at a loss. They have a pretty weak business model, Sunrun. So what they do, like there's different ways to buy solar panels. Solar panels may cost someone $30,000. So you can just pay $30,000, get panels put on your home, and you get a tax rebate. So say your tax rate is 25%, then you'll get $7,500 rebate when you do taxes. But what Sunrun does is they help finance the solar panels, because a lot of people can't afford $30,000 up front. Reason people don't buy homes, they just can't afford the down payment. So what Sunrun does is they let you just pay monthly installments, say a couple $100 a month, or whatever the agreement is. And but it's I know that the way the business model is, it's very I can't remember exactly the nuances of it, but they never make money. That's what it boils down to. They always just burning cash. Thanks for hosting another live stream. Hey Eric, you got it. Yeah, just trying to pump out content, and also this is how I learned too. As soon as I moved into my house, I think about 6 months after I moved in, I got solar panels put on my home. It was one of the best investments ever, because there was some months it was over $1,000. My PG&E bill was over $1,000, which is crazy, because it's just me and my wife. I mean, it's about 2,000 square foot home, so it's a moderate size. But over $1,000 in 1 month, I just couldn't believe it. So I did a lot of things to try to lower the bill. Like we try to upgrade our windows. We were more, cautious about leaving we have a swimming pool, so more cautious about leaving the heater on the swimming pool on, more cautious about using the AC, things like that. So we were able to bring it down. But then when we got solar panels, I was probably spending, I mean, 1,000 was a big month. I probably averaging like, I'd say like 400. So that was my average bill. So a month is 400. And this is if you want to get solar, this is the kind of analysis you can do. And this is a good thing to do, because then it teaches you how to do an analysis, and you could apply a similar type of thing when you look at stocks. So that was my annual cost, $4,800. And say I live in the house for 10 years, or I'd be spending $48,000 over 10 years. And then I look at how much money the solar costs. So I'd have to shell out, I think it was like $40,000 for solar panels. And then, but my bill went down dramatically. It went from like 400 down to like $50. So I'm saving every single month $350. But I had to shell out $40,000. So how many months? So if I save $350 a month, I have to have the solar panels on my home for 114 months. I'll make that a positive to hit my break even. So nearly 10 years. But when I looked at it, I was probably spending more. It's probably close to 600 a month. Um, so so I think my break even was at like year 5 or something. So it paid for itself. So now I'm like making money on the solar. So off the bat, of course, you're going to be in the red. It's kind of like starting a business. You have to be in the red because you need startup costs, right? Um, you have to, paint, put down a carpet, things like that. So there's always going to be upfront costs. And then there's opportunity costs. Like you could have been making $5,000 working somewhere. Okay, let's see what else. Polaris. What type of company is Polaris? Polaris is an auto manufacturer. Okay, so they sell motorcycles and currently produces. It looks like ATVs from that other picture. Motorcycles, ATVs, snowmobiles. So heavy duty kind of. That's an interesting business. Have you guys ever looked into Polaris? I definitely like what they sell. I think it's there's definitely going to be demand for that. So $45 a share, 2.3 billion market cap. Let's just do a DCF. I'm just curious. $45 a share, 2.3 billion market cap. They design, engineer, manufacture, market power sport vehicles in the U.S., Canada, and internationally. They're based in Minnesota. They've been around a long time, 80 years. Free cash flow looks a little shaky. So why is free cash flow projected to be negative? I think it's likely they're doing a lot of investing, because when you have to build out manufacturing facilities, it's a cash outflow until you start making the products and bring in revenue. So can they get back up to? They kind of peaked at like 520 million. Yeah, I think it seems like a good value if they get back up to where they were. And I don't think 500 million is that much, because you can see they have 7 billion. The projection is 7 billion of revenue. That's interesting. So currently their revenue is 7 billion. but it was 9 billion in 2023. What an update. Yeah, it was a good day today, right? A great day for the market. Yeah, it's interesting. Polaris. I thought I thought that'd be a good stock, but it looks like the kind of the market share is shrinking, which is why their dividend yield is going up so much. See, look at that yield, almost 7%. They pay a nice dividend. So if you're older or retired, this is a good stock as dividend play. Just look, it's trading at a 4-year low. It hasn't been this low, 14-year low. What am I saying? Hasn't been this low since 2011. So, and at one point it was 150 a share, and now it's down to 40. So the fact that it was that high at one point gives me the comfort that it can get to that level again. Let's update this chart. It was a great day today. Let's see. Did Apple go up or down? 207.82. Apple went up. Amazon. Apple was doing the worst for the first half of the year until the last day, June 30th. Apple went up like 2% and Tesla went down 5%. Berkshire. Do you guys own Berkshire? I've been telling you, you got to own this stock. It's a much better. You should buy this instead of buying the S&P 500 because all that cash they hold, they could just swoop in and buy a company at and get a great deal. It's kind of like if your neighbor wanted to sell their home and say they needed to, they got a job offer and they needed to move uh, within 2 weeks. They don't want to sit there advertising the house, say it's 1.1 million. And even if somebody's willing to pay 1.1 million, they have to get a loan, takes a few weeks to get approved. You're next door, you say, million in cash. Then the deal is done right away. They'll probably take it. You get a big discount, you save $100,000, but they'll probably do it because it's a guaranteed transaction. When you go through a bank, things not only take long, but it might not go through. That's a Berkshire. They have all this cash, they could just swoop in and buy a company at a great deal, especially when the market pulls back. Yeah, everything went up today. Let's see, Google 177. Lyft 1619. Meta. What happened? It's slowing down on me. Manipulation. The stock market is always manipulated. It's always been that way. It's manipulated to a point. Meta went down a lot. It went down 2.5%. Like back in right before the Great Depression, it was manipulated by 3, 4 like entities, like J.P. Morgan, the person, a few people were like controlling the market, and that's when there was, actual fraud. Now it's being manipulated, but in a good way, I guess you could say. 1293. Wow, it went down a lot. Netflix. Oh yeah, I remember seeing that 3.4%. It's a big drop. SLV 3273. That didn't really move much. Actually went down a little bit. Spiders hit an all-time high today. 617.65. Tesla was the bear of the day. That was Apple. What was Apple? You mean manipulation? It's, it's a good time to buy it though. When there's a pullback, that's when you want to buy it. So Apple's down 17% for the year. Tesla 26%. So just a week ago, Apple was doing the worst, but it's come up a little bit, and Tesla has gone down a lot. Look at CVS; it's still riding high. Of the big stocks that I'm tracking, CVS is doing the best. Why is CVS? Let's see, is Walmart? Because when I think of CVS is a big company, right? But CVS is like a mini Walmart because everybody's mini next to Walmart because Walmart's the biggest. Maybe not the biggest market cap, but they have the most revenue of any company in the world, the most employees of any company in the world. What else are they number one in? They're number one in a lot of things. It used to be like the government, the Chinese government had the most employees because a lot of people are employed by the government. Like the U.S. government employs a lot of people. The every country, some countries, that's their main employer is the government because you need policemen, you need teachers. So the government is the entity that employs. And how do they get the money? It's tax dollars from us. When we work, when we go to the store, we pay taxes, and that goes to the government. And the government, they do pull out. There's always these like shady guys in the government that take money. That's never going to get around that, and it's very inefficient, the government. But for the most part, they do their best. They pay the teachers a salary. They pay the firemen a salary. So Walmart's up 8%. So why is CVS up so much? 37%. It doesn't make sense. Who's similar to, I guess, Target? What's Target's ticker? See, I could just change the ticker in the website name. No, T is AT&T. What's Target's ticker? TGT. TGT. I mean, these kind of things are helpful to when you start looking at one company, you look at similar companies, and then you learn, and you go, what's the reason CVS is up so much and this company is not up so much? Well, it's likely that maybe just CVS went down so much last year, and that's the reason it's up so much this year. It may not be it may not have anything to do with fundamentals. How is this possible? Target is down 38%. Is that right? Because say you were going to be on that TV show, The Biggest Loser, right? And whoever loses the most weight is the winner in pounds, not percentage. So it's really the heaviest person has the best chance of winning, right? Like if somebody's like 500 pounds, it's so much easier for them to lose weight than somebody who's 200 pounds. It depends how tall you are, how far you are from your mean. But let's say both are guys 6 foot, men 6 foot. I mean, it's if the winner, the person that loses the most weight in terms of pounds, it's $1 million. I mean, it's almost guaranteed the 500-pound guy is going to win, unless he just doesn't do anything, unless he overeats and doesn't even care about the money. But assuming he even tries remotely, he can lose as much weight as this person. So unless this guy dies, he has to win. So same thing with stocks. If a stock gets really, really low or really, really high in the past, like far away from the mean, that's one of the main reasons stocks go up or down a lot. It's not their fundamentals. Fundamentals are a long-term game. I think that makes sense to me. Does that make sense to you? Now Target took Tesla's spot as the worst on the list. That's just crazy. Why is Target? So Target, generally you want to buy stocks, buy low, sell high. Target is a stock you should be looking at, assuming you like Target and you think, and I definitely think they have a good business model. I mean, brick and mortar retail is a rough game, and lots of companies go bankrupt. So if that's a concern, them going bankrupt, you might want to avoid it. But if you don't think they're going bankrupt, and I can't imagine them going bankrupt in the near future, there's a lot of upside potential because they're trading now at a 6-year low. So you'd have to go back to 2019 when they traded these levels. So it's easily a 52-week low because just so when June 30th. So in June 30th, it was 148. Now it's 103. So it's down. $30-something percent, 33, 34%, 30%. So it's down 30% in 1 year. Where was I? Yeah, and from the peak, which wasn't that long ago, it's not like you have to go back 25 years. It was just back in 2021, they were trading at 260. It's down 60%. Remember when Meta was $89 and we were like, oh God, we could have put all our money in Meta and we could have retired. Could you imagine if you sold all your stocks? Because Meta, say you didn't catch it at 89, it's hard to catch a stock exactly at the right point, but even at 100, which is possible because it was trading below 100 for a few months. But the thing is, you probably wouldn't have held it that long because there's a lot of ups and downs along the way. But even if you held it to 600, so if you sold all your stocks, even if you only had $50,000, if you were like the Dogecoin millionaire and you took all this credit card debt and put it all into Meta when it was 100, you'd have $250,000. But you might have had more. Maybe if you took on credit card debt, maybe you would have had $350,000, and now you'd be at 1.7 million. It's hard to put everything, all your eggs into one basket. It's so easy to look at it that way. I think about this stuff all the time. I'm like, oh, why didn't I sell everything and put it into Meta, into Nvidia? Why didn't I sell everything and similar price levels as Target, but one saves lives and the other covers the transportation in my portfolio after selling Norfolk Southern last year. Merck and UPS for me the past 2 months. There's so much fear in the high street retail, specifically during COVID. That's the reason I've avoided Walmart and all similar things. I know it's a lot of fear. Good information, Forgotten Era. There's a lot of fear. But the thing, what just boggles the mind is that they're pretty much the same company. Target and CVS, very similar companies. I mean, I'm not talking about like Meta versus AT&T. Like these are like very similar companies and polar opposites, almost exactly opposite, which is also plus 37%, minus 38%. Um, Walmart's a tank, so um, they're much more stable than almost any other company. So if there's these big swings in the market, um, Walmart would be much less resistant to those swings. It's very unlikely Walmart's going to move at 30-40% clips. It could happen, but uh, and the thing is, these aren't like small companies. These aren't like 5 billion market cap companies. These are really big companies. I mean, probably 200-300 billion. But Target is it's actually smaller than I thought. I thought it was a couple hundred billion. 47,186. I just want to create a new market cap. Okay. Market cap B. Billions. I'm enhancing. I know I could just do like I could just automatically pull the data into the spreadsheet, and I probably should actually do it on some. But I do like manually doing it because then I can like see it and I remember it. So manual sometimes is more beneficial. It's kind of like Buffett reading those 10Ks, the paper 10Ks, instead of doing keyword searches. There's something 3.1 trillion Amazon. 340. Berkshire, they finally broke $1 billion. CVS, I thought CVS is probably a couple hundred billion. 88 billion. I thought it was bigger. I definitely thought it was bigger, but it's still a mid cap stock. Or is it large cap? Okay, what's the definition? I forgot. Is it 50 million? 50 billion? 10 billion. Large cap is 10 billion, so it's a large cap. The companies are getting so big these days, it's hard to they have to like move the caps. Large cap should probably be like 100 billion now because times have changed. Two one three nine. Big companies. There's so many stocks, like it's never ending. 6. 6.7 billion. Meta's $1 trillion company. 1,808. Microsoft, the second biggest company in the world. 3,697. Netflix. Netflix is getting up there. They're probably 300 billion. 550. Nvidia is the biggest company in the world. 3,853. A little bigger than Microsoft. But I'm pretty sure Microsoft's going to be bigger at some point again. This SLV is not how much silver is out in the market. It's this particular ETF. How much is invested in the ETF SLV? So another field I have to update manually. So maybe I should pull it in. Tesla. Is that still trillion? It might have fell below a trillion. Yeah, it fell. Look at that. 969. It fell below a trillion. It moves around a lot, that stock. But that's when people won't buy the stock when it goes down. They're like, I can't buy it. What if it keeps going down? They people pretty much only buy stocks. The majority of people, like 90% of people, only buy stocks when they're going up. So CVS added 37%. So they added like 30 billion of value to the company just this year. And Target lost like 15 billion of value of the company. I mean, in terms of value, Tesla lost like 250 billion of value of the company, which is crazy. There's so much fear. Okay, that same comment. Amazon's flat. Wow, Amazon's flat for the year. That's interesting. They're right in the middle. Most stocks are up, except Apple, Google, Target, and Tesla. But most stocks are up. I mean, the market's up overall. Any other stocks? Fluence Energy. I'm not. Las Vegas Sands. The I believe that's a REIT. Wynn Resorts. Build this first. I was thinking um, building companies that build homes. I was thinking that might have really good momentum the second half of the year. Because tech, I mean, but we keep saying it was like tech keeps going up. But if you listen to everyone, you would have lost. I like doubled or tripled some of my tech investments. So if I listened to everyone and sold out of tech and bought safer stocks, I wouldn't have benefited from that rally. Yeah, build it first. That's a home building company. I think it's mainly residential homes. Let me double check that. There's a manufacturing supplier of building materials. The company's headquartered in large supplier. Yeah, so they provide materials, I think, for mainly residential homes. They serve new residential construction, repair, and remodeling professionals. So it's one of the. So instead of buying stock in a company that actually builds homes, this is just as good, maybe better, because they sell the materials to those companies. So there's definitely less risk, and they sell material not just to people building homes, but other manufacturing companies. But it is mainly home builders. That's their main customer, probably like over 90%, if not more. So builders first. So what do you guys think about building stocks, there's definitely correlation with building stocks and delinquency rates. So you can see, actually, it was pretty recently in March 2024. So just a little over a year ago, it was over 200. So it's down. It was down over 50% real recently in May. It had this huge surge. I mean, you would have been sitting on the stock for 20 years. Not much movement until recently. You're so fortunate to be living in a time like this. If you were born in the 60s and you were trading in the 80s and 90s, you would have had all this opportunity. And people keep saying, "Oh, I missed all the market run up, so I can't invest anymore because I missed it." If I had money 10, 15 years ago, I would have been rich now, but I don't have money until now. But it's the wrong thinking. It's definitely the wrong thinking. Because we're just getting started. And look how much the S&P 500, it was pretty much, it went up from 93 to 2010. Not that much though, but it went up. But look at the ride. And I'm telling you, it's just getting started. You're going to miss out if you keep putting money in cash. There's going to be dips, but you just hold, and then it'll come right back up. Just don't sell on the dips. Let's see, Camping World, that's Marcus Lemonis' company. He had that TV show, The Prophet. That was a great show. Let's see the stocks that went down, biggest decliners. Ava Technologies, 1.58 billion market cap, down 24% in one day. Regen Cell, Progress Software. Not too familiar with Carmen. We saw that yesterday. LZ Technology. TMC, the metals company. Nebius Group. AMC, down 9%. Archer Aviation. So if you don't want to go with Boeing or Airbus, go with Archer. Comstock. New Scale. I know New Bank. I don't know New Scale. MicroStrategy, 100 billion market cap company, down over 7.5%. I wonder if it's because of the connection with Tesla. MicroStrategy. Well, it really came down. Oh, Mister. Oh, this is Mister. Oh, okay, Mister. They issue convertible debt to buy Bitcoin. They lever. They use a lot of leverage to buy Bitcoin. They're the largest owners of Bitcoin in the world, so they own more Bitcoin than anybody else. I'm used to seeing the ticker, not the full name. That threw me off. But if it's down 7%, that implies Bitcoin is down a lot. and Bitcoin's down 1%, which doesn't make, well, they do use leverage. So when Bitcoin goes down, this goes down more. And when Bitcoin goes up, this goes up more. And Bitcoin has been coming down a little from the peak, but it's still trading maybe 3-4% below its all-time high. So its all-time high was 111, almost 112. Almost 112. It's at 106. Yeah, I mean, it could have been a great stock to buy. I shorted it. So totally the opposite. Look at the stock chart. They started buying Bitcoin, I think, back in 21, maybe 22. But they started adding it at a faster rate the past 2 years. And also Bitcoin went up a lot. So it moves with Bitcoin. So you could have went from 60 in December 2023 to 400. So you could have multiplied by 6. December 2023 to current, multiplied by 6. Let's They don't have Bitcoin on Simply Wall Street. Okay, we're good. Yahoo Finance. Oh, Yahoo Finance. I just want to see, like, let's do January 1st. So 69 to today. I just want to see if it really moves 1124. 69. Today 71. And what's the price today? 373. So it's up 304. So 441% it's up. This is Mr. I want to see if Bitcoin, what their change is. Okay, so it's a year and a half. So January 2024. It doesn't go back? That's pretty weak. Oh. So 42,280. And it's currently at 105,695. Okay, so this makes sense because they use leverage, so it should go up a lot more than Bitcoin. So Bitcoin in 1.5 years is up 150%. In the same time frame, this is up 440%. So that makes sense. They own a ton of Bitcoin. I think like 20 million Bitcoin. I did a video and I showed you all the times they bought it and at what price. It's in their 10K. Annual filings. This is when it gets fun. Looking at their 10K. How do we here it is. If they give the information, they laid out pretty nicely. It's pretty easy to follow. So this is the debt they issued, the convertible debt. So they issued in December 2020, they issued 650 million of convertible debt. And the interest rate is 0.75%. They actually lowered it. The 2021 convertible notes, they mature in 2027, to zero interest. So people were buying the debt of over $1 billion of that debt. They were buying it and they weren't even getting an interest rate. So it's like giving somebody money and then saying, okay, pay me back in 6 years, no interest. So everybody would want money from you if you didn't charge interest. But that's what was happening because people who own the debt, they weren't looking to get the debt bought back. That's generally what happens when you buy debt. Like the home, your mortgage on your house is debt. Say it's a $200,000 home loan. The bank is looking to get that money back, and they usually get it with monthly principal interest payments. So maybe every month you pay, 2K of interest plus 1K of principal. So each month you knock $1,000 of principal off, and then after 30 years you pay off your house. But in this case, people were willing to take on the debt. That's how valuable their equity was. But that didn't last. They brought it back, the interest rate, in 2028. Still pretty low. But again, $3 billion of debt at 0% interest rate. It's a good deal for this company. It's like free money. And what they did, they just took that money and they bought Bitcoin. I wish. So the issuance cost. Well, this chart, they don't show the Bitcoin. They just show the debt. It's probably the next chart. It's interesting, right? Interesting business model. Where's the I want to see the chart where they talk about the Bitcoin they purchased. Oh. They used to be a tech company, so they used to actually provide a product and service. I mean, but it worked out. The people who bought the debt were able to convert that debt to equity, and then they got stock in the company, and they made a really nice return. Maybe I search market price. Here it is. Because they only have 21 digital asset origination cost. Okay, I'll just. I wonder why they don't have 2025. Is this an old? Oh. Anyways, so it looks like they started actually buying Bitcoin in 2022. Thought they bought in 2021. They issued the debt in 2020 and 2021. They didn't issue any debt in 22 and 23. Just 2021, then jumped to 24. So they had one as of the end of 2022. So they did buy some before 2022. They just don't have the information. So at the end of 2022, they had 132,000 Bitcoin. The average price per coin was 30K. So the origination cost, what they paid for it, was $4 billion. In all of 2022, they purchased 1.9 billion of Bitcoin at an average price of 34,000 per coin. Approximate number of Bitcoins held. So yeah, they purchased 56,000 coins in 2022, average price of 34,000. In 2023, they purchased a lot of coins, 258,000 Bitcoin, but the average price was 85,000, which seems high. At the time, I would have been worried if I owned this stock, because I'm like, that's a high price to pay for Bitcoin. But now it's gone well past 85,000. So as of the end of 2024, they have 447,000 Bitcoin valued at a price of 62K. So they're doing really well. 447123. And because the price of Bitcoin is 105,000, like killing it. That's how many coins, and that's the price of Bitcoin. It's a big number, right? $47 billion worth of Bitcoin. But the good thing is their cost base is 62,000. So the 447,000 coins, they paid $62,000 each. So it cost them only 27 billion to buy the Bitcoin. So that's a profit of 19 billion. So that's a gain of 70% on the Bitcoin they bought. But the reason the stock is up so much is because they're using leverage. So if they were not using leverage, the stock will be up 70. 440%, which it has just since 2024. But if you go back to January, I did 2024, right? January 2023, it was $25. So $25. So they're up almost 1,400%, 14x. It's easy to say now, right, after the fact. Because if you told me Bitcoin was going to be 110,000, I wouldn't have bought Bitcoin. I would have bought this company. I would have bought both probably, but I would have put more into this company because it's up so much more. It's up 14x. And how much was Bitcoin? This is January 2023. How much was Bitcoin in January 2023? Why is this not? I just changed the time frame. Oh boy, why did it do that? Let's do January 2023 to just the month of January. Okay. Bitcoin was only 16,547. So Bitcoin was up 500% since January 2023. But this is up 1,400%. So nearly triple Bitcoin. Yeah, it's everything's so easy after the fact, right? But the thing is, even if I told you in January 2023, put all your money to MicroStrategy, even if you did do it, so you put 100K in, and once that turned into $1 million, like from here to here, turn it to $1 million, you probably would have, even if you say you didn't sell out, right? And then it came down from $1 million to like 700,000. You kind of be stressing a little bit. You're like, oh, I just cut it. Just said, I'm going to take it. Very few people would hold out until now. That's the problem. Generally, people, it's hard to look at your account to see $1 million and not do anything with it. Let the market fluctuate, because the market would have brought it down a lot. Not it wouldn't have been a loss at any point, but we don't think that way. $100%, I would have booked profits, because people always say, like, oh, I wouldn't have sold, or I would have. Like, people say, tell me the next Amazon. I said, even if I told you about Amazon in '99, you wouldn't have held it for 25 years. You definitely would have sold way before. And then people would say, well, no, if I invested 10,000 and it went up to 100,000, I would have just sold 10,000 to get my initial back, and then I would have let it ride. And I think there's no way you would have did that. Because say you did do that, you sold 10,000, now it's down to 90,000. Then that 90,000 turns into like 500,000. And then at 500,000, eventually it'd be like 25 million, but there's no way. Exactly. If you see 20%, it's hard, because unless it goes straight up, whatever, without ever going down, then it's easy. But the problem is when the dips occur, then your anxiety goes up. And it's not like the dip is a day. It could be a year. It's down for a year. And it seems like it's never gonna go back up. Or even, so I've sat on stocks for 3, 4 years because I know it's gonna be, it's gonna come back. So what any other stocks? Talking about all these big stocks. Am I missing any big stocks on this chart? I like this website because you can sort it by top gainers, top losers, small cap, highest dividend, highest cash, most active. That's interesting, right? Most active. Tesla's usually on top because they don't just take. It's not volume. It's volume times price. So that's how they come up with most active. That's how they do it. It's not. If it was just number of shares traded, these would all be penny stocks. Because the stocks at a 0.00001 cent. I could get 10 million shares at $20, but I can't even get 10,000 shares of Tesla. That's like my life savings. What would you take on Master? Well, we missed it. USA listing Merck. We missed a boat on Master. I do think Bitcoin will continue rising, but it's going to be hard to double from here. I don't know if it's going to happen. Could take a couple of years if it does. Because the problem with the stock market is when things go up, then it tends to be selling pressure because people want to lock in their gains. They have these sell orders set. Like if they buy a stock, they buy Bitcoin for $20,000, $30,000 they're selling half there, and then $40,000 they're selling the other half. So the higher stock gets, the more likely it is for people to sell it. The lower stock gets, the more likely it is for people to buy it. So that's why you see these ups and downs, and also the market. When we're in a bear market, stocks generally just go down. Fundamentals do help or hurt. So you can see the resistance. I remember when it was like around 60, and I'm like, geez, 60, will it double? And I'm like, even if I got it at 60, I mean, it really sat at that level. I mean, it did go back up to 60 5 months later, but it didn't really, it was kind of 70 was a resistance point. So it took a good 3-4 years to finally break through 60. And we saw the first time it broke through 100. That 110 is kind of like that resistance level. And then the sell off, and it looks like it has a new bottom resistance. That's generally what you see when stocks get to certain levels. They kind of get capped at a certain point because, of course, any stock could go down to a penny. They can't go down to zero unless they go bankrupt. But any stock could go down because it's supply and demand. But that's kind of the new resistance level, 70. And that the upper limit's 110. And I could see it taking 3-4 years like it did when it was around 60. So that's why I wouldn't buy Mister, but unless you're okay waiting 5 years. Of course, it could happen next month or even at the end of the year. But I think it's just hard to see it doubling again. NVIDIA can double because it's really based off of sales, right? And how much demand there is for AI, things like that. But Bitcoin is purely supply and demand. There's no fundamentals built in. You hold a lot of Mister. Um, I think it's a good time. But that's just because I'm not very bullish on Bitcoin. I am bullish in a sense that it's going to go up in the long term, but as an investment, I'm not that comfortable with it. But I think it's your I always use this analogy. You ever see that game on Price is Right? Like the host turns over a two of diamonds, and the person says higher, lower, and this is an obvious higher because there's only one card lower, or another two can. So they go higher, and it's a six of hearts. So now they won $100, and they go higher, lower, and then almost everybody's gonna say higher because more higher than lower, and say it's a ten of clubs. So now they got $200. So that's how I think of the market. Of course, if you have a ten of clubs, I think that's where we are now. I think we're a jack. We're a jack with Mister. So would you go higher or lower? Of course, it could go higher because you might get a queen, king, or ace. So there's three cards, but there's more chance of it going lower. I'm not 10 years from now, it's definitely going to be higher. Well, not definitely. Bitcoin will definitely be high in 10 years. This, I'm not sure about as much. But so this is like a jack. So would you go higher or lower? If you think it's going to go higher, then buy it. Well, keep it. So like Target was like a 4. Would you go higher or lower? I would definitely go higher with Target. There's a lot of upside because it's trading at a 4-year low. Thanks, Blue X. Appreciate it. But yeah, but this site's pretty cool. Most active. And that's why the stock market's so attractive because it's such a liquid market. Very the most liquid stock is Tesla. The most dollars were put into Tesla in the past trading day. Um, right here, they list it. So $44 billion was traded on Tesla, which is $300 times 145 million. Let's make sure that 300.71. That's the price. And how many shares are traded? 145.09. I just want to make sure I understand it. I think I do, but I just want to make sure I'm using the right numbers. So this is how many shares were traded in the past trading day. So 43.6 billion of volume. Exactly. 43.63. Exactly. So that's how much money was traded. If you bought a share of Tesla, you bought $300 of Tesla, assuming you bought it for 300. If you sold 10 shares of Tesla, you sold $3,000 of Tesla. So it doesn't matter whether you bought or sold. We just know 44 billion of volume was transacted. But the sells definitely beat the buys. There's more selling activity than buying activity because it went down 5%. We can see in this chart. How often do you stream? Um, I try to stream 2, 3 times a week, but sometimes, whenever I have time. It's usually on the weekends. Hmm. What day would Okay, here we go. Okay, so right here in the top left corner, you see where my mouse is, right below my mouse. If I move it, it's going to change the day. But right here in this box right here is the open, close, and volume. So that's for the last trading day. So if you look at the top left, it opened at 303. It hit 304 at its high, intraday high, but it ended the day at 300. No, sorry. Its intraday low was 300 spot 48. It closed at 300 spot 71. So it's a red candlestick. So we know it went down. When it's red, it goes down. When it's green, it goes up. So that means it started up here at 302.91. It opened at 302.91. And then it closed down here at 300 spot 71. And this says 10.3 million is the volume. Let's check this out on the website. This volume is 145 million. So this is probably a week. I imagine they're doing a week to track the most active stocks. Palantir. Oh, I hate Palantir. I didn't lose money on Palantir, but I sold it, and it makes me more upset than any other stock. Because I try not to sell stocks. I try to buy and hold long term, but I sold it and I missed out on a lot of upside. So 145 million shares, that's probably in the past week. They should footnote that somewhere, how they come up with the volume. The most actively traded stock can be found below. Company is sorted by daily volume and supplied with other stats to help you find out why they're so popular. So I don't understand how this says 145 million, but Yahoo Finance says the volume is 10 million. Well, I don't know. But anyways, so when it's a red candlestick, that means sell orders. There were more sell orders than buy orders. Of course, it's always going to be even. Every single time a trade completes, it's executed, there's a buyer and seller. So if it's one share, then it's that particular transaction, the buyer bought a share, the seller sold a share. If it's 1 million shares for that transaction, a buyer bought 1 million shares, a seller sold 1 million shares. So it's always going to be exactly identical, because you can't have more people selling a stock without buyers. It's orders. It's buy orders and sell orders. So when the sell orders outpace the buy orders, it puts downward pressure on the stock, and the stock goes down. And if the opposite happens, when there's more buy orders and sell orders, it's green and it goes up. If more people, like it's at 303, so no one will put a buy order in for 310. That doesn't make sense. Because anybody's willing to pretty much sell it to you at 303. But if you were buying Tesla, if it's 302 today, I usually just buy it, whatever it's trading at the market price. But if you wanted to put an order in, you would buy it at maybe 290. or anything below. If you really wanted it, you, like I said, I just do a market order. But if you didn't want to do a market order and you really wanted it, you might just do 300. But what if it never hits 300? What if it goes straight to 400? Then you missed out. I'm no stock expert, Blue X, but I would cash some profits of both mentioned stocks you own. So, but it's good to look at this stuff to see activity, because you don't want to buy a stock that has no activity. I mean, you'll always find a buyer or seller. It's kind of like if you want to sell your home, if you go down far enough, you will find a buyer. Most homes you can just sell whatever your neighbor or whoever sold a home on their block, on your block. The most recent sale with a similar square footage, that's pretty much what the price of your home is. So say it's $300,000. That was the most recent sale. But if you really needed to sell your home, you could find a ton of people that are going to pay $270. Obviously, it depends where you live. If you live in a big city, it's even $290. You'll find a lot of people. But if you live in a small town, not a lot of people looking. You might have to go a little lower. So same thing with stocks. So that's why it's good to invest in stocks that are highly liquid, because they move. Tesla moves. It's almost always the most traded stock each day. Nvidia is second. But it's a pretty big drop, right? 44 billion of trading volume, then it drops 25% to 33 billion. Then it's cut in half. So these two stocks are really highly traded. And I don't own either. Kind of feel stupid. I do own the S&P 500, so in an indirect way, I own these stocks. Apple. Look at Robinhood. Damn Palantir. Grinds my gears. Robinhood, Microsoft, Meta is always highly traded. Mr. It's a good website. Then you can look at performance. So how it's performed. So in the past year, it's up 50%, but year to date, it's down a lot. That's interesting. It's up 18% in the past 3 months. The 10-year is up 15x. Look at Nvidia. God, so much. Meta had some good movements recently. Yeah, as you guys know, I'm bullish on Meta. I own quite a bit of Meta. I have 2 accounts. In my main account, I own 661 shares, and I'm up 181%. On one block of Meta, I'm up about 300% because I bought it at 150. I'm up on all my Meta, but the one I bought in 2017, I actually bought a lot. I bought in 2012, but I ended up playing options. They got called away. But percentage-wise, Netflix is my best performing stock. 241%. Netflix. I only put 45,000 into it, and now it's 156,000. So we're never happy. We're just mad we didn't put more into it when it goes up. Look at freaking Palantir. I bought it in 2021, sold it. Bitmine, 45 million%. That doesn't seem right. Seems a little odd. Mercado Libre, that's Coca-Cola, right? Mexican, Mexico's Coca-Cola bottling arm. Oh, it's a fintech. What's their Coca-Cola bottler in Mexico? I can't believe it. Okay, yeah, Mercado Libre is an Argentine company headquartered in Montevideo. I went there, Montevideo, and it's an online marketplace that it's an e-commerce company. Okay, well, yes, e-commerce. Now I remember. Thanks, Blue X. It decades to build up to that. Doesn't come overnight. DoorDash is only up 30% in the past 10 years. Zscaler. I like Zscaler. It's a good semiconductor company. ServiceNow, wow. Carvana. Look at Warner Brothers Discovery. It's crazy how that stock is down so much. Is it a good time to buy Warner Brothers? I wouldn't buy Carnival. Snowflake is down. Pfizer. I own Pfizer. Oh boy. Pre-market gainers, pre-market losers. Yeah, I like this website. I should use it more. That's most active. Maybe I should pay for it. Um, I recommend look at the 52-week low, or even all-time low, even better. If you could see a good company that's at an all-time low, I search for B for billions because I don't want any $1 million company. It's those they're kind of thinly traded. Customer, if you're into vessels and shipping. Jefferson Capital, Voyager, Western Union. Somebody was talking to me about that. See, like we did a lot of research on Western Union, and you can see how bad it looks, how much this company's struggling. So when a company's trading all time low, it's hard to pick it up. But seems like an opportunity. High beta, most volatile, highest revenue. That's Walmart is number one. They've been number one for a long time. Amazon, I don't know when they'll be number one, but it's going to be soon. It has to be. I think United Health may be a good stock because it's down so much with all the. I feel Western Union is a dying business. Yeah, that's the thing. It's a dying business. Yeah, of course it's getting into online transfers too, but the competition is brutal. The the PayPal's, the Venmos, and then you have a lot of other companies that do online transfers. So it's a tough industry. It's not like it was in the 80s. There wasn't much competition. You had banks. But banks are so clunky and expensive. It's hard to Berkshire. What am I looking at? Oh, this is a highest revenue company. Okay, high dividends. Usually Zim is number one, 48%, and they've been paying that. It's not like a mock natural resources. Any other stocks before I sign off? We should do a DCF on. I could run a fast DCF. United Healthcare, I think it's a good one. That's a stock I should thinking of picking up. It's just so hard. The problem is when you buy stocks, you have to sell something because it's hard. You usually don't have like a ton of money laying around, so you generally have to sell something to buy something, and it's hard for me to sell. It's like getting rid of a child. Very emotional. So 283 billion, 326. So yeah, the free cash flow is projected to go to 31 billion. So lots of growth. Very healthy company. Even in the worst scenario, I'm still at 536, and they pay a high dividend, right? 2.7%. And the nice thing is, if you own the stock today, if you own it at 326, and it's a 2.7%, 2.9% yield, and say the stock doubles, which I think it can do, it could double, and they were paying $9.45 in dividends per year. That's at 2.9%. Generally, companies keep it or raise it. They don't usually cut their dividend or increase it drastically because the stock price went up. They usually increase it modestly. So let's say they increase it 5%. So instead of 945, they paid in 2025. They pay 993. But your cost basis was still 326 when you bought the stock. Everybody has different cost basis. I'm sorry. So they do. It's 2.9% of. Let's keep it at two. It's 2.9% of the stock price. So your yield will double. So it's. I think it makes more sense in Buffett's situation. He bought Coca-Cola like 40 years ago. So his yield is over 100% because his cost base is so low. That's a great thing about buying a stock at a low price that pays a dividend. your yield, everybody else's yield is like 2, 3, 4%, and you're like 20, 30%, because if it's trading at 650 and you bought it at 50. GBP for me in England. Okay, so you get in pounds. I got into it too, but the care home bribery investigation is worrying me. Yeah, but that's an opportunity. There's always problems like that. Okay, well, we're only down to 4 people now, so okay, thanks for joining, and let's see how this chart looks tomorrow. Well, when I do it. Okay, thanks a lot. Well, it's late for you oh, it's really early actually for you. It's at 9 p.m. for me, and 5 hours is 2 a.m. So you're like 7 a.m., right? If you're in Britain, so you're waking up. Okay, talk to you later. Thanks.